All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Welcome back, traders. 10:30 market update. And Dennis, no bounce off the open. What's going on?
No bounce off the open, Joel. We knew it was going to be a weak day, and we talked about the 1360 level, taking that out. I think, when they're not bouncing here, we've been, pretty bearish here on the pre-market info show for the last week or two. We've taken some heat from some of our commenters. Obviously, you've written two blogs there, pretty bearish on both, and I just think this market was priced to perfection, Joel, like you were saying, and definitely some of it's coming to roost there today.
Yeah, looking at the S&Ps, I mean, usually when you hit the open down 14, 15 points, you at least get, a scaredy cat cover on the open. We didn't get that, barely got above the opening print, which was 1360. Where it's going to stop on the upside here, if we go into a rally mode, 59 and a quarter was Tuesday's low, and you also have that intraday high. But Dennis, you got to be looking at this 1352.50 number, the 9-day low. That's been also the low since we've made the recent high of 1419 and a quarter. Dennis, you look at my numbers on the site. I mean, it is not pretty under that level. We're looking about 20 handles, and of course, we're not going to do it today. But boy, I tell you, we closed below 1352.50, and this market is in some deep trouble.
Yeah, I think so too. And speaking of deep trouble, Walmart's in some deep trouble, obviously, with the whole bribery thing that's been happening. We talked about it getting a bounce off the hop. It's exactly what it did. It opened at the low in New York, 59.15. It's trading, and it has bounced right up. It actually got a dollar pop. It really popped nicely, over 60 bucks. Has come back and consolidating down this whole 59.50 range, and that's the area that me and Joel were citing as the initial support. So it opened a little bit before, below where we thought it might open, although opening at the low. So if you were able to buy the low, it's probably a good trade. 59.5 though is where the real support was, and it's kind of finding it there, Joel.
Yeah, I guess we were talking about maybe it opening at 60 and being support, but it opened a buck lower, opened into support. Right now, it's a tough call, Dennis. I mean, you're basically right in the middle of the range. I just expect this thing to chop around. If it does go out and take out that 60.24 high, I don't expect it to go too far above that. That 59.13 low on the other side too. If it gets down there, I think you'll run into buyers already down to 59 level. But what's nice about a day like this, Dennis, is you get parameters to follow for the next few days. If this 59.13 doesn't hold over the next few days, then Walmart's heading to 58 bucks. On the other hand, you're going to start to get a creeper rally above the 60.24 level. Big gap to fill in the stock, so you have some good reference points in Walmart going over the next few days.
We got Kellogg actually having a very bad day too, although not as bad as it was in the pre-market. This thing was trading down closer to 50 bucks in the pre-market. Open at 51.78, is drifting down lower, near the low of the day right now, 51.41, and obviously approaching down, and making new lows here. Hung out at the 52 level and just straight down. But a lot of these other food stocks too, Joel. Like I was looking at Heinz here. I was looking at Campbell Soup. Let's just bring up intraday charts here for our viewers. Like Heinz opened right at the high. Nice sympathy move. If you were on it, obviously these things did open lower, but they didn't open down that much, and they've really started moving down. Heinz, Campbell Soup, the same story. Opened near the highs. Has moved straight down. I know Kraft, I think, is a similar story as well. Opened up near the highs and has kept drifting down. So if you were on for sympathy plays this morning, some of these other food stocks open lower, but not that low. But the whole sector is weak now, Joel.
Yeah, Heinz looks like it's going to be gravitating towards some major support here at 51.50. Several lows in that area. Looking at Campbell Soup, good. That stock is going to find some major support at the $33 level. But I mean, those the kind of plays that you're talking about, Dennis, are good off the open. And if you catch them off the open, but it just seems like the longer the day goes on, the more that the stocks take on the nature trade according to their true fundamentals and true technicals.
It's true, but we're just trying to highlight different strategies for some of our short-term traders as well. And sometimes there is some good sympathy moves off of these. And if you're lucky enough today, obviously to catch a few of those sympathy plays, it's a good morning for you. Lots of other stocks been moving here in the news, obviously, too, Joel. But one we want to look at, we've been talking about for so long, is Apple. I mean, it's a stock actually just in the last few minutes has started breaking down again here, Joel. We're at 561 now. I'm going to bring up an intraday chart for our viewers here. We kind of hung out here all morning. We actually opened up at 570, just down a couple bucks. Moved up here. We spiked up here. Got to 576, but then found sellers again. Every time this thing rallies, it's finding sellers, and now it's really starting to get weak here. 560, Joel, you talked about if it got into this 570, it might get down to the 550 area in a hurry. Just fell 10 bucks. You're only 10 points away from there.
Yeah, Dennis, I mean, it's easy, and I don't want to say it's easy, but when you look at these charts and you see that the moves that they made on the upside, you got to figure the moves are going to be 3 times as volatile on the downside. I mean, that's just the nature of the markets. I don't care if you're trading Ford Motor Company or you're trading Apple. When stocks go up in a parabolic fashion, they come down 3 times as fast. I put the lowest number on the sheet at 555.75. That was a low from March 13th. I mean, I would use that area maybe to cover short. Certainly wouldn't look at that area to go long. In the earlier show, Dennis, I mentioned just that 550 level. I mean, you're just looking at the chart, and it's just like, this thing's going to 550. I mean, where can it inflict the most pain on people? The longs. And that would be at 550. You had a double gap and go area. You'll find support. That was the area that it broke out from back in March. So I like 550. 555 is a secondary number. Some people are starting to get real nervous ahead of earnings here. There's a lot of people that got caught in the analyst upgrades above 600. Let's talk about that a little bit.
I know,
Dennis.
Joel. Goldman came out, and Goldman sometimes is right, Goldman sometimes is wrong, but they got it wrong this time. They upgraded it there last week. Stock was at 610. They upgraded it, went up to 620 maybe an hour after the upgrade, like during the regular session, has been straight down ever since. So Goldman definitely not helping their clients in this Apple call, because it's at 558 now. It's down over 50 bucks in a week since they upgraded it, Joel. Not very, obviously some of the Goldman customers probably not happy with that upgrade there, Joel. 550 is where you think it's going. I kind of tend to agree with you here on this one. I mean, this stock is so volatile, though. Like, it's going to chop around 20 bucks probably tomorrow, and then, ahead of the earnings, who knows where this thing goes after it reports.
Right, and I mean, I'm not even talking. I don't even want to call Goldman out on this, Dennis. I'm just talking about the whole way up.
Yeah, there was way more analysts.
The higher the stock price went, the higher they raised their and it's not supposed to be that way, Dennis. It's not supposed. You don't raise your earning projections after the stock price moves up. It's the opposite. The earnings, you're supposed to predict the earnings and are going to be better, and then the stock price is supposed to go up.
It's so true, Joel. I mean, how many analysts coming out? Morgan Stanley, there was an analyst 940. Piper Jaffray giving it $1,000 price target. Everybody was on the bandwagon on this one, and they're all getting hurt right now. And the herd's participating. I got an article coming out in CFA magazine that's talking about this whole, herd mentality, and we use Apple as an example in there. That should be out next week. But same thing, like when the herd's participating in a stock, the stock will keep climbing until that herd, and when they hit the sell button, everybody hits the sell button at the same time. The stocks, go up like an escalator, down like an elevator.
Right, and we'll keep following it. I mean, there's always a chance that it makes a double bottom, within a point. I guess that'd be a double bottom in Apple, and then you get a turnaround. So some shorts got to be loving this ahead of earnings, and we'll see if that 555.75 level comes into play. Dennis, IBM is just getting taken to the cleaners here.
These tech stocks don't look good, Joe. We talked about the IBM level this morning, saying if it took out that low, it was trading right around there this morning at 197.52. It has taken it out. We're at 196.81. I think this is a pretty open ride to 195, Joel, and gapped up there. And usually when they run that far up that quickly, they can run that far down that quickly. And I think that's where the stock might be heading. So it's probably another $1.81 worth of pain. Starts to get below 195, who knows there? But I think there's some merit to 195. Joel.
Okay, and Microsoft did get a pop just over settlement, but that seems to be losing its luster from Friday, as well as the GE earnings. Gave a pop on Friday that lasted like maybe the first 15-minute bracket. Now that stock's gap down lower, working on the $19 level. But you can look at all these levels in the S&Ps, folks, and stuff, or in the individual stocks. But just keep an eye on this 1350, 250 if you're trying to bleed this market to the short side today to try and bring something in. That's about all we have for our 10:30 doom and gloom update, folks. Sorry. Probably time to start getting bullish, Dennis.
Yeah, I know. We've been so doom and gloomy. Bearish. When you see everybody start throwing in the towel, that's when you know the bottom's in there. But they're still not throwing the towel in on CNBC, so I'm still bearish.
Okay, all right. That's our 10:30 a.m. update. We appreciate all the comments and feedback we get from our subscribers, and we'll be back with you tomorrow.